which is what did I invest in and why. And today we're going to talk about, the main plays I made on Tuesday, May 26th, which is today. And, I really didn't like making watch lists because it felt odd for me to show, what I'm looking at and then potentially not invest in anything I mentioned. And so instead, what I'm going to do is simply share what I did invest in after the fact and why. And generally, these are going to be swing trades so that you can actually, take advantage of the information learned here. But I don't want people to copy this trade. Remember, read the disclaimer. None of this is recommendation or advice, simply educational content. And what I would love for you to take away is potentially maybe find a similar play or better play, right? From, my logic in terms of why I enter certain trades. All right, now as always, the 5 ways to support the channel. Number 1 is completely free, is like, comment, and subscribe yourself. Number 2 is to share this with others. I make these videos for my friends so that they can learn trading from me, from a trusted source. Obviously, since I'm their friend, I'm not going to lie to them. And if this is helpful to you, then hopefully you maybe know someone else that could find this content useful as well. Number 3 is Amazon affiliate links in the description. You don't have to buy the product that it links you to directly. You can buy any product on Amazon after using my affiliate link to actually just get to Amazon. And that's free-ish because you actually have to buy something, but it doesn't change the price of the product that you buy. I just get a small percentage of the sales to support the channel. Number 4 is referral links for Webull and Robinhood, also in the description, as well as the donation link in the description. Never required, but always appreciated. All right, so the knowledge required for this video, you actually do need to understand debit and credit spreads, which unfortunately I have not covered yet, but I will cover this Saturday, and so make sure to catch that lesson. But hopefully you can still follow along from your own self-education. Like I said, I highly recommend go watching Tasty Trade. Their content is free on their YouTube channel as well as their website. They have a free course on their website as well. I would take advantage of both of those things so that you can follow along. When like I said before, I'm going to start moving into actual trades because that's more interesting in order to apply what you learn instead of just, learning how trading works, right? It's always more fun to try to make money using what you learned. So 2020, May 26th, main plays. Read the disclaimer. Nothing I say is a recommendation or advice. Just for educational purposes only. Remember to practice cautious optimism. I can be wrong, and I have been wrong this past week, which has cost myself a lot of money, which is fine. But just remember to be cautiously optimistic. You give a poor man to fish, and you feed him for a day. You teach him to fish, and you give him an occupation that will feed him for a lifetime. I'm a very, very big believer in this, which is why I don't want people to just copy my trades. I want people to learn from my educational content on this YouTube channel and hopefully make better trades than myself in their own trading. So the 2 main trades that I made today, number 1 is the Avis Budget Group, which is CAR ticker. It's a car rental business. I think it's going to be a slow expected recovery. I underline expected and potential because as always, remember cautious optimism. Nobody can predict the future, right? And so they were trading at $40 pre-COVID. They're currently trading at about $18. I'll pull up their chart here, CAR, right? And so you can see here, there looks like there's a lot of resistance. The highest point right here is 19.98, right? And so the highest point is about $20 since COVID has occurred and crashed them down. And recently, one of their competitors, Hertz, just filed for Chapter 11 bankruptcy. You can read the news on Google or any news source you choose. But the play I made was a $22, $27, August 21st expiration call debit spread. Why did I choose this price range and this expiration? And the reason I did that is because, number 1, like I said, there's a lot of strong resistance at the $20 range. I think it's still, even with Hertz going bankrupt, it's still going to be a long, slow recovery for the entire market. And honestly, Avis Budget Group is in a dangerous situation right now. So I don't think they're going to pass $20 anytime in the near future. And if anything, they're probably going to go downwards, in my opinion, by their next earnings. And so why did I choose August 21st instead of June or July? Is because their next earnings is estimated to be August 3rd. And you always want to have a week or two after earnings so that you have if you're wrong, you don't lose 100% of your options position. Remember, risk management for options trading. And so I chose an August 21st expiration with a $22, $27 strike price, call debit spread. Now, if you look at the fundamentals, there's a current ratio and fixed charge coverage ratio. I'm not going to explain what those are. Go Google them to learn for yourself. But maybe I'll touch on it a little bit, actually. But you see that both of them are below 1 in their, you can click quarterly Q1 2020. Their fixed charge coverage ratio is actually negative 0.66 because they have negative earnings per share the first time in several quarters. And they also have a below 1 current ratio. A negative fixed charge coverage, or even a below, anything below 1 fixed charge coverage, means for every dollar they make, they can only pay off 60 or let's say it's 2, right? If it's a fixed charge coverage of 2, that means you have $2 for every $1 of debt expense. And if you have, let's say 0.5, that means you only have 50 cents for every $1 of debt expense, like interest and stuff. So you can't even pay off your debt expenses, which means you're in danger of bankruptcy. They have a negative 0.66 fixed charge coverage right now. And they also have a below 1 current ratio. A current ratio of 1 to 1, or let's just say 2 to 1, means that you have $2 of assets for every $1 of current liability. Google it, figure it out what that means, but that is very bad fundamentally. And so I'm very bearish on Avis Budget Car Group. They're trading at about $18 right now, if I remember correctly. Yeah, $19, and my break even is $22, $23. And so I have, even if it goes up, as long as it stays below $22, I still make money on this play. And so that is why I really, really like this play. I think, I'm pretty bearish on Avis Budget Group unless, they somehow are able to convince people to start renting cars, which I don't think people will, because that, how often do you think people actually clean those cars right after someone uses them? So do you really want to rent a car that someone used and hasn't been cleaned? I don't think the people will. So that is my opinion. And so I think by August 3rd, their next earnings, they're not going to break the $22 range. So that's our number 1 play. And the number 2 play is VTIQ, which is Vecto IQ Acquisition Corp. This is the blank check company that is all over the news and all the memes right now. People think it's going to be the next Tesla. I'm not so sure. And actually, I'm pretty sure that's not going to be. Go check my Twitter, and I always tweet things, videos, and news that I think are worth sharing on there. On May 17th, I tweeted 2 videos from Justin O, a YouTuber, previous hedge fund analyst, that analyzed this stock and how bad really and how overinflated the stock price is based on his analysis, which I strongly agree with. And also, you can read the Seeking Alpha article by Henrik Alex. It's also posted on my Twitter account that I just posted today on why I'm very bearish on this stock. And what the play I made was a $22.5, $25 January 15th, 2021 call credit spread. And why did I do this? And even though it's trading right now, VTIQ is trading at $29, which is absolutely ridiculous in my opinion. I actually have to hope that the stock price goes all the way below 22.5 for me to make the full amount from this play. But I am very confident that by January next year, they are going to, because if you read the articles and watch the videos, you'll understand my rationale. So go do that. I'm not going to explain all of that right now, but I wanted to share these 2 plays and how you can learn about why I did them in this short video here. And one thing else I want to talk on the credit spreads that I made is how great in terms of like the profitability, if these plays work out, are. So if you go to let's see here, Robinhood, and go to Avis. Oh, sorry, car. Oh, here. What am I doing? Could have just done this. So, here, car 22. And see, I'm not lying. Obviously, you can see in my portfolio that I have both of these positions, and I sold this at $130. Risking $500 of max risk. And if you do that, I would make 26% in 1 second. Shoot. Okay. I would make 26% return, 131 actually. So let's just do that. 131 over 500. 26% return in 2 months. When does this expire? Oh, 3 months. June, July, August. Yeah, 3 months. Which is amazing in my opinion. 26% returns in 3 months is absolutely awesome. Remember, like, the general long-term return is 7% a year, and for the short-term traders and all the Wall Street guys, they're just trying to beat that long-term return, which is 7% a year. So just keep that in mind whenever you're like, wow, I'm not making that much. Really, if you make anything over 10% a year, that's amazing. So, and especially, it doesn't seem like that crazy when you're talking about small amounts of money. But as you get bigger, you can trade larger positions and you can make a lot more money. So I sold $5,000 of this, which is 20 contracts. Oh, wait, no. This is 4 contracts. Sorry, I'm thinking about the other trade. I sold 4 contracts of 500 risk. So this is a $2,000 risk position, and I made $523 if this plays out to my expectation, which is Avis Budget Group stays below $22 by August 21st. And then VTIQ, I sold it for 77 cents or $77 for every $250 worth of risk, right? Because of this spread. I think it sounds like ridiculous. Why are you selling $77 for $250 of risk? Well, if you do 77 divided by 250, that is a 30.8% return, which is absolutely awesome on the amount of money I'm risking. Now, obviously, unfortunately, why am I actually able to get some of this is the time. I have to wait for me to fully realize the 100% of my credit. I have to wait until January, which is 7 months from now, essentially. No, not 8 months from now, which is a lot of time. But the reason why I bought January, I think it will probably come down from the $29 it is right now once people start realizing how crazily overpriced that is. After the merger news comes out on June 2nd, they're voting next week, and then after people start realizing how bad the deal is, it'll come down by end of July. But the founder and the previous shareholders have a 180-day lockup period after the deal before they can start selling their shares. And trust me, in my opinion, they're definitely going to sell their shares because it's currently trading at $29, and their agreement is so that they can sell it. They can buy and essentially sell at the market at like $11. And so, originally the companies thought that $11.50 is a fair value for this combination of companies, and now it's trading at $29. So just get that through your keep that in mind. And so that is why I made this trade, and I gave myself so much time, because 180 days after June 2nd is technically a November 29th. And so I gave myself another month and a half, so that after that, when the owners of the merger start selling their shares and pushing the price down, I have a little bit of time and leeway for that to happen. Alrighty, so those are the 2 main plays that I made today. I don't know, I'm just gonna make these as often as I make big plays. I invested about $5,000 into VTIQ and $2,000 of collateral for Avis Budget Group. I may even do more over time, but right now I'm still holding my oil plays, and so I want those to play out after seeing the oil inventory news this Wednesday before reallocating my portfolio. All right, so I'm going to stay on for a few more minutes. Let me know if you guys have any questions. As always, please paper trade until you are familiar with your brokerage's platform and are consistently profitable for at least 1 to 2 months, and may volatility be ever in your favor this week. Good. Best of luck trading. And thank you guys for watching. Seriously, it means a lot. If you have any questions, feel free to leave them in the comments below as well. I always answer answer the comments. So no need to catch them live, but obviously, I would really appreciate you guys watching this live, since I love to answer questions live as well. Stay on for another minute or so. Good. Alrighty, looks like there's no questions. So thank you guys for watching, and